It's interesting that you had the Fed announcing a pullback in their repo operations yesterday. The markets turned around, and yet today it looks like, nope, we are perpetual Pollyannas.
You know, the market seems to be looking through a lot of the bad news that everybody's been focused on. And if you want to look to the likely suspects, you know, you look to the companies that David earlier was talking about, the casino stocks, anybody with high exposure to China. You know, for a company like a travel company, a lost seat is lost forever. You know, but for other companies like Apple, an iPhone sale lost today is likely to come back in the last half of the year. So the markets are looking through to the other side of this, and right now they're mostly seeing green.
We heard from NVIDIA that's expecting a $100 million impact on the first quarter, and still its guidance beat what the expectations were. We heard from Alibaba that said this was a black swan event, that that things are really rough.
Black swan is a big word.
That's what the CEO called it. Tell me a little bit about, if there's this big impact, how soon do you expect a recovery?
Markets are already looking for the recovery at this point. Look, it's a $14 trillion economy, so it's a big deal. And you're going to see numbers come in at this point. But right now, the coronavirus is not in my top 3 list of things I'm worried about. I'm more concerned about the fact that estimate revisions have been coming down for the last year, even before the coronavirus. A year ago, we were looking for $186 in S&P earnings. Now we're down to $175. I think the elephant in the room is really the election at this point. Nobody's really focused on that. If it starts to really push to the left, you know, the word socialism doesn't play all that well for stocks. And at some point in time, if it looks like Bernie Sanders is the likely nominee, then you're going to see a pushback in sectors like healthcare, energy, even big cap tech.
And interest rates?
Interest rates are very important. We cannot have another year of just multiple expansion. Asset classes compete for your dollars just like everything else. It starts with the risk-free rate. As long as that stays low, stocks are the better asset class.
So give me a Valentine's Day strategy. Show the investor a little love here about where they should be putting their money to work today.
I think broadly speaking, most of the sectors of the market look pretty good to me. The 2 challenges that I have as an analyst, the energy sector, it's been good money after bad. It hasn't done anything for a number of years at this point for some obvious reasons. The second is healthcare. Not sure how exposed I should be to that, to some of the points I just made a few minutes ago. If Bernie Sanders is the nominee, then I would have to imagine that Medicare for All is going to be a focal point. That can't be good news for some of these positions.
10 seconds. Are there places where you want to be right now that you're not?
I'm still in where I want. Well, I'm almost everywhere else. Technology is my biggest overweight. Financials number 2 after that.